Alright, so this is a quick trend review. Um, the market was in a downtrend. It's the Dow Futures 5-minute chart. And over here, there's an exit, meaning exit the short position and start looking for longs if applicable. And you can see the synthetic index, which is just like a group, you know, to see like the entire equity market. It's going up. Makes a very strong high, pull back. Alright, so why not, it makes the case for going long because it's clean breakout and pullback, as you can see, of this area. So this is the point to get out of the Dow and start considering the long. And based on the synthetic index, it would be a good idea to go long. But let's say you don't go long there. There's a pullback, there's a rally, and here it's totally confirmed that um, that there's a turning point, or the market has gone from weakness to strength on this first pullback right here. LOS is lack of supply. So here there is definitely a change right here. But the real turning point is here. Why? There are many reasons, but one of which is look at the strength of the equities. They're very strong. Right? So um, here also the market goes from weakness to strength. Now the rest of the movement here, pull back, pull back, pull back. Here's the thing, like the group here is starting to correct or minor or at least like a counter trend down, but the Dow doesn't. So how do you interpret this? This is very important. It doesn't matter, like, if you're swing trading or whatever, or day trading, but when the market's doing one thing and your stock is doing something else, or it could be something else like oil versus the energy group. What's going on. The thing is, the group is down, but the stock is up, or the market is up, or whatever is up. You don't. This is an important lesson. Don't take the short position until it confirms, because in some cases the stock can actually lead the market, and it's a market that will turn. In other cases, the market pulls down the stock, so you don't know what's what. Okay, in this case, even though the group is going down, it turned out it was a test of this area. The Dow is moving sideways, which is an indication of relative strength. Okay, the fact that the market group is going down and the whichever components are in the down or not is an indication of relative strength. So the components in this must be pretty strong. And eventually they both are in harmony at this point right here, where it goes up for 40 minutes up here, and the Dow also is continuing its trend. At that point, both are in harmony. That's how Wyckoff described it. Anyway, they both are quote unquote in harmony, or they're both just trending together. Okay. At this point, you have rally, pull back, and you have rally here and pull back here. This is a very strong indication. Basically, the idea is that this is also a turning point. Now, there are many different types of turning points, alright, but the major ones are either for the entire trend or for the swing. Swing based turning points, and it's like right here, you have a turn. Very simple. It's like a zigzag, right? So you have a turning point here, you have a turning point up here, you have a turning point up here, you have a turning point up here, 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 here. The zigging and the zagging. they represent turning points, the swing high and the swing low. But when do you know which turning points have a high degree of success and enough reward in them? Because if you trade every rotation, it's not. It's like over here. If you counter trend, there's nothing here. Or if you go here, there's no reward. If you go here, it's very little reward. So the idea is you want to get into the turning points that are meaningful, meaning they have a high probability of a large reward. Okay, so there's turning points for swings, and there are turning points that initiate entire trends. The turning point for swings can be with trend or counter trend, but you want the best one. So this in this here is a strong turning point, very strong turning point, and this is identified by activity analysis. I guess it could also be done by volume analysis, but I'm not too sure if it can be done by just volume analysis alone. This one here is done by activity analysis. In any case, it's a very good area to get into. All right, now nobody knows if it's gonna work or not, but it's really setting up a decent swing. All right, so it rallies, pull back, and tests in this area, and you see the synthetic index. They're all going together. Everything is in what Wyckoff said harmony, which means that you're trading with market breadth and market um, direction and all of that, right? So you know everyone's on the same side. Basically, that's the point. Everyone is on the same side. So that the pullback, and then look at this. This was what it resulted in. So this was the entry. I mean, you don't have to take it up here, obviously, because it's too much risk. But in many cases, markets will pull back and test. So you want to get in around in this area right here, or the high of the prior swing, or something. There are many entry methods. I can't go through them all, but there's many entry methods. So it goes down, uh, starts moving sideways, and then over here you're thinking, oh, what's gonna happen, right? But nothing really to sweat, because it rallies and does what it does. The activity analysis was critical to let you know that it's probably gonna have a nice big move. Uh, anyway, this right here, more volume down, low volume, low volume. This was a potential, turning point to go down, but with the and the group was also going down, but for some reason the stocks in here are strong and they were unable to turn down. So it rallied, and sometimes it'll do that. But the trades really were here, where exit the short and go and look for a long, because the market now is in harmony with the group. They have to be in harmony. And I'm not saying that because I read it somewhere. I'm just saying that from real experience. That if they're not in harmony, you're gonna get stopped out. Alright? Simple as that. So here they're in harmony, the turning point. Here there's also a turning point, but you gotta look at how to get in on the pullback. And like over here, I don't like it because they're not in harmony. Okay, but a lot of folks would be looking at this area and say, oh, wait a second, isn't this a spring? And they're right. This is a spring in an uptrend with follow through, and this is the test of the spring. Alright, spring, test of the spring, retest, and it goes up. But you know, um, you want to also look at the volume indications and also sideways action and a higher time frame and all that, and just be able to kind of process all that information without making a mess. Anyway, so bullish indication here, bullish indication here, and then it just all the white lines means that the trend did not break. Trend did not break. In fact, it didn't even do a stop out anywhere here. It's all higher lows. Trend did not break, and they want to go even higher, as indicated right here. Pull back and bang. There's the first lower low, and this might just be a correction to even go higher. I don't know. Although the market looks a little exhausted because this move right here is climactic. And it did have a secondary test, which can either lead to a minor trend reversal, or it can also just lead to a correction. I don't know yet because this market is exceptionally strong. And the other thing that I am noticing is the ranges have expanded in the Dow, which means at least for two days, I think traders are returning or something's going on because the range today was four. Uh, let's see what the range is. It was over 400 ticks. I think it was 400 ticks. Uh, and the range yesterday, or well, I don't know what. For some reason, I'm having issue with the indicator, but anyway, the range last trading day, previous trading day was 311 ticks. Today, the range again, I mean, I think it's 309. So that's a very good sign that the market is becoming active. All right, so long as it doesn't hit the 200s or go below that, forget about it. This is going to be stop out after stop out. So you want it above 300. I think it's pretty good if it's above 300. That's like a decent range to trade. Anything less than that is, especially in the twos, you know, is horrible for trend trading. You know, it's really bad. And it's very difficult. But now the game, I think, I think it could be Trump. He announced that SpaceX or something. You know, the anyway, we'll see. Take care. Bye.